Well, let's start with superannuation. And Garry Weaven's been described as the godfather of the industry superannuation funds movement. He helped create IFM Investors, which gave super funds the collaborative clout to invest overseas and also in massive infrastructure projects here and around the world. He also founded Industry Fund Services, which created financial advice and other services for super fund members. And he also helped establish ME Bank, once owned by the big industry super funds. But as Australia seeks an answer to its housing shortage, Garry Weaven thinks it's time superannuation funds stood up and provided the capital. I caught up with him a little earlier.
I think the time has come, and I think the time has been coming for a while for them to move into and open up residential property as an asset class. After all, a number of them have been investing offshore in multi-family dwelling arrangements, rental arrangements and so on and the like. But the real need here is to increase the total supply. Governments need to intervene in not simply with their balance sheet. They need their balance sheet for social housing because, of course, social housing has to be paid for largely by the government. So they need their balance sheet for that. But apart from that, they need their regulatory or legislative powers to clear some of the blockages. And the other important thing is they will want, I imagine, to skew the development of new housing towards the lower end, towards the affordable end, not just social housing, but towards subsidised rental housing and to the lower half of the housing market. I think that's where the big need is, as well as a need for key worker dwellings in a lot of areas where people can't actually get labour because of a shortage of housing in the particular location.
So tell me about the distinction between different government policies. Previous governments have said that people should be able to use a bit of their superannuation as a deposit for their first home. This is about telling big super funds to take a chunk of their money and to build housing. Where is there a distinction between those two strategies?
Well, as Paul Keating once famously said, the coalition wants you to eat your house, basically, to survive. But I think the reality is that the super industry can do a hell of a lot, to increase the total supply, and particularly at where it's needed, at that affordable end and the key worker end. And there's no reason why they shouldn't, because they can. I think if you look now at the sort of returns that are available, it's quite adequate returns. Remember that super funds, they don't simply want to go for high risk, high return assets. They need a blend of risk and return. So if they approach it in that manner, they take a certain amount of development risk in some cases, in other cases buy existing rental housing stock or develop it, then they can get something that will be very similar to their current balanced or default fund arrangement in terms of the total returns over the medium to long term. So funds can do it and they need to do it, but critically what is needed is the ability for people whoever finances it, to be able to do so in areas where it's needed. And that, of course, requires a concerted cooperation between federal, state and local government to facilitate that.
Okay, so in other words, what you're saying with the state and the local government is about opening up land to make certain that the time to actually get rezonings done is improved, so that there is the land available to put the houses on, to put the people in, which is close to where they're working.
Yes, and importantly, close to other facilities like public transport or education or health facilities. Clearly, people have been saying for quite a long while, myself included, that there needs to be much greater density around public transport to make that work efficiently and to be able to offer people much better commuting times to work. So, we need more density. It doesn't mean to say we have to have high-rise buildings everywhere, but what it does mean to say is we've got to stop this notion that whatever a developer applies for has to be cut down in some way to make some group, usually a very small group, happy. So I think, that a really great need, as well as, of course, real balance sheet spending to fix the bottom of the housing market, the social housing, and to subsidise some rental beyond the social housing area. So, that only governments can really open that up in a big way, and the more they do in that way, the faster will be the build of the required number of dwellings over the next 5 to 10 years, but also the mix towards good location and towards affordability, importantly, can be enhanced through those sort of policies.
So is this the build to rent strategy that many people talk about? And if super funds embrace build to rent, that they could again make affordable rental properties that could be available to workers in some of these well-located areas you talk about?
Absolutely, and that's the biggest need. Actually, right now is the biggest need. And if you look at what's happened in major cities around the world, generally speaking, that has happened. Institutions have gone in and invested in multifamily projects in inner city or mid-city, middle ring type areas in London, in Berlin, in New York, and so on. And in some cases, Australian super money has already invested in those particular situations. Now, that's been easier because there's been an existing market for them to invest into. Here, it is a matter of creating that market, creating the vehicles that they can invest in and so on. And that, I'm pleased to say, finally, after all these years, that is finally starting to happen. And I think, the signs are that will happen in a pretty rapid way.
So then take me to whether there should be a mandate. Should it be that 5% of superannuation funds should be directed towards housing? That's around $175 billion now. So that goes some way to providing the capital to build these houses.
I think the problem with mandating is that then you, forever after, you're at the mercy of whatever lobby group or political group wants to mandate their pet idea. So I'm not in favour of mandating. Years and years and years ago, superannuation was mandated to invest in, I'm going back here to the 60s and 70s, superannuation was mandated to invest, in fact, in government bonds. And all that really did in the end was suppress returns. And it wasn't needed, as the subsequent events have proven. So, no, I'm not in favour of mandating, nor do I think it's necessary. I think good government policy will create incentives, not just for superannuation funds, but will create incentives to achieve their social goals. And a very worthwhile social goal is a much more rapid development of affordable housing, whether for individuals to own or for rental.
I'll tell you what, Garry Weaven, it's always good to chat to you about these subjects. Appreciate your time on the program today. Many thanks.
Pleasure, Ross.